if we look at the NASDAQ right now, since November of 2021, the NASDAQ's down 15%. So that's halfway between correction territory, correction meaning that the market is down 10% from its all-time high, to almost to bear territory. Bear territory is when the market's down 20% from its high. And if we listen to the news, we hear, and even just like I gave the report a while ago, we're up 1.5%, we're down, 2%. You hear all of these percentages every day, and you hear the news and you listen to it. And sometimes, you can just get lost in, okay, well, we're up, we're down, we're sideways, we're what? So what does that mean? And we get all upside down and we don't really remember which way is up. So to put that in perspective, and it's great and it's fine, and you can listen to that every day as long as you can keep your emotions in check while you do. So, listen to these two different statements and consider how you might feel. In the last month, the S&P is down almost 5%. Where would your emotions be at that time? Well, that happened last year from September to October 2021. The S&P 500 was down 5% in a month. Or in the last 12 months, the S&P is up over 18%. How do you feel now? Do you feel like, well, I have some FOMO, some fear of missing out. I got to get in because the market sounds like to me like the market's just going to go higher. Well, I'll tell you, both of those statements are true. From September through October in 2021, the S&P was down 5%. But in the last 12 months, if you had invested 12 months ago, you'd be up 18%. To put this further in perspective, let's look at, because here at Financial Issues, we are long-term investors. We're not trying to time the market. We're not trying to make short-term decisions based on what might happen, because, there's things that are probable and there's things that are possible. So the things that are probable is we take a look at what we know. We take a look at the numbers. We take a look at the things that we can have some certainty about. And we make decisions about what is probably likely to happen. Then there are things that are possible. So 2 years ago, COVID happened. It was always a possibility, but we didn't even know it was a probability. Right? So it's, when we get into the possibilities, anything's possible. I mean, Russia could invade, something could totally happen out of the blue that nobody saw coming. But if you look back on the S&P, a chart of the S&P for 5 years, and I encourage you to go look at these charts and look at different time periods and look at the peaks and the valleys, and imagine if you were opening your statements during those times and get a real good feel of how you feel about it. If you had invested in the S&P 500, which is an all equity index, 5 years ago, 3 years later, you would have been up 45%. Not bad. Less than a month later, COVID hit, and all your increase would have been wiped out, and you would have been right back to where you started 3 years prior. So what do you do? Did you get out? Did you think it was going to go down further? Or, were you scared? Did you say, I'll just get out, and when I start to see things get better, I'll move back in? Well, if you got out and you're still out right now, you're sitting 5 years later where you were 5 years ago and had no gains. So you went up, you went down, you got out, you stayed out, you had no gain. So if you were still out today, 0% return. But if you got in 5 years ago, never opened a statement, never got scared, never did anything, never got out, 5 years later, you'd be up 90%. You would have almost doubled your money. So, and that even includes being down 7.5% since January of this year. So you'd still be up 90% from where you were 5 years ago. That's doubling your money in a 5-year period if you were in the market. So, I say all that to say, watch it every day if you want, try to make predictions on what's going to happen in the short term, but be prepared to be wrong because, lots of times we just don't know what's going to happen in the short term. And just, take into account your personal situation and your time horizon. If you have plenty of time, don't worry about what's going to happen tomorrow or next month, because, if it bothers you that much, just put all your statements in a drawer, and in 5 years, look at it. In 10 years, look at it. You're probably, if history serves as any guide, which it doesn't, and that's the disclaimer that we give all the time, is that future performance is not predicted by past performance, or is not guaranteed by past performance. But then again, we're having a look at possibilities versus probabilities, and we just have to make some good stewardship decisions on that.
Hey, remember to click the subscribe button right here on the screen. And don't forget to hit the notification bell so you'll be notified when new content is added. And more importantly than anything, you don't want to miss all 3 live hours of Financial Issues every day from 9 to noon. And you can watch it on FISM.tv. That's FISM.tv.